Hello, everyone. Welcome to the Real Estate Show. It's February the 11th, 2014. My name is Joe Brett. I'm a broker with RE/MAX Ideal Brokers of Medford.
I'm Pete Belcastro, broker with John L. Scott, and welcome to the show tonight. You know, once a month here on RVTV, we get together and talk with some great guests about real estate and real estate-related issues throughout Jackson County and Josephine County and Southern Oregon, and you name it, and that's what we talk about.
And topical issues even tonight on the docket with some voters' choices that are coming up this May that folks are going to get a chance to learn about.
That's coming. You're ahead. That's in the second part
That's
of
what
our
happens
show.
when you let me start.
The second segment too tonight. Well, you know, in May we've got the OSU Extension Service vote. Randy White from the JSWCD, the Jackson Soil Water Conservation District, is here. We're going to talk about what they did to get their vote, of course, approved, and what the OSU Extension Service means. Also, the JSWCD has a big open house coming up, and we'll tell you and show you some of their new building as well. That's in segment 2 tonight.
And you had the pleasure to go out and take some pictures out there. We'll take a look at your camera work tonight,
All
too.
right, yeah, okay.
In our first segment, we're going to welcome Jim Palazzolo and Sandy Boughton from Mortgage Express. What's new in the mortgage and the financing landscape for 2014? What's ahead for the year? What are interest rates up to? We're going to cover all of that and have our market watch for you as well.
All right, and of course, we're on the radio and KMED every Saturday morning at 10 o'clock and 2 o'clock. We invite you to tune in there. We also have a website at realestateshoworegon.com. We invite you to go there. It's got names, it's got email addresses and phone numbers of many of our guests. If you want to get a hold of them, they'd love to talk to you as well.
And Pete and I, besides just being the host of the show, are actually real estate brokers, and our contact information is on there as well. It's no cost or obligation just to ask a question or find out what the value of your home might be or where you might stand in the market. We're always there to help.
Good news, it's raining as we do our live show here on February the 11th. We're still praying for rain and snow. Anyway, we're going to take a break, come back. The Real Estate Show is next here on RVTV.
And welcome back, everybody, to the Real Estate Show. It's February 11th, 2014. My name is Joe Brett. I'll be riding herd on the first segment for you here tonight. I have a couple of great guests to talk about financing and mortgages with us. They're our experts on the subject. You know them well by now. And let's introduce our guest tonight, Sandy Boughton across from me, loan officer from Mortgage Express. Welcome, Sandy.
Thank you.
And Jim Palazzolo from Mortgage Express. Welcome, Coach.
Evening, Joe.
Great to have you both here. And we are featuring Mortgage Express in our first half hour tonight. I'm going to give folks our regular market watch on the comings and goings of sales in Southern Oregon. But we're already a month plus into the new year, if you could believe that. I'm having a hard time with it myself. It seems to be moving right along. So let's just start by catching up what's new and fresh on the scene for the mortgage and loan business to start the new year. And how's business? How are things going to get this first 5 weeks underway?
Well, we've had a lot of changes in the beginning of the year. We've had some exciting things happen, some changes in the lending industry that we'd like to share with everyone. We want to cover a few things that have changed. First of all, I want to talk about FHA. FHA is a great first-time home buyer program. It requires only 3.5% down, has some really flexible guidelines. We've covered a little bit in the shows before, but FHA has county loan limits, and those loan limits have recently changed as of January 1st. We were at a 422.5 loan amount for quite some time for FHA loan limits, and those have recently decreased. We're now at 279,450. And what does that mean? What does that mean if you're out there buying a house? If you're out selling a house, what does that mean for a purchase price? So the loan limit's 279,450. What that means is a purchase price of 289.5. So basically, if you're an FHA borrower, your purchase price is capped at around 289.5.
It almost seems counterintuitive that it's come down because house prices are going up. The market value dropped so far from where those loan limits were in the 400s there. So it takes time for the feds to kind of reassess their numbers and rework the numbers.
Negative. I mean, it's somewhat negative, but we want to let people know that at 3.5% down, you're kind of capped
at 289,000. I mean,
289.5.
You could buy a lot of homes in our valley. I mean, a lot of people are in the game with that. That's not taking a lot of people out of the game by any means.
The trend in interest rates, Joe, has been really, really steady. In fact, you know, we've been just looming on the 30-year fixed mortgage in that 4.5 range. Some days a little bit better, some days a little bit higher. And we always focus on what is the rate at 0 points. And people always want to know, what's the rate? Well, the rate is the prevailing going 30-year fixed rate compared to how much money you want to spend to pay points. So we always start at what we call par pricing, which is the least amount of closing costs. And then we allow our borrowers to choose if they want to buy that rate down. And then we perform a break-even analysis to see if that investment is really, really worth it. So, but rates are in the 4s.
Yeah.
The FHA rates at our place anyway are in the 3s.
They are.
Yeah, in the high 3s. And so we're seeing a little bit of refinance activity. A lot of the people have already done it, but we're beginning to see more refinance activity for those folks who didn't have equity a year or two ago,
Right.
and suddenly the market is now in their favor. So, a couple things about USDA, right?
USDA, for a while there with a government shutdown, we were experiencing some lengthy time frames.
They got really backlogged. Yeah.
USDA is a grant program, and every year there's so much money set aside for first-time home buyers. And first-time home buyers doesn't necessarily mean this is your first time buying a home. So for people who are entering the market and purchasing a home, 100% financing, for a while there we were experiencing 45, 60 days to get reservation of funds. Reservation of funds comes after the appraisal, after the loan process has gone pretty far, and we've gotten everything we need, full approval, and then we ask USDA to set that money aside out of that grant program. So for a while there, after that government shutdown, there was a significant delay in processing those reservation of funds. And that's really gotten sped up quite a bit.
Up to 30 days. The last couple, the USDA regional office now is quoting us 10 days, but the last two we did, we came back and forth. So, you know, so it really helps the consumer because now we're not extending the lockout that long. And so the USDA has kind of got their act together. So once we've gone through the loan process, which is typically about a 3-week period, to get final loan approval, then it's off to the USDA, and then we run it out. So that's sped up significantly. There's a couple of other.
We should clarify real quickly. The USDA loans are for outside the city limits of Medford and Central Point.
Correct.
They're 100% financing, which means no money down.
Correct.
And they're a really incredible opportunity if you want to, if you can be outside of those city limits. There's some properties and some opportunities out there with those USDA funds.
The only stipulation is USDA actually puts a cap on income. So here we are always scrambling to find out how much income people have to qualify them. When USDA comes through, there's factors considering the number of people in the household, the number of dependents, and the total household income. So But it is a great loan program for people, and it is speeding up, which
And a lot of
is kind
people
of nice.
That's really
qualify.
good news,
A lot
yeah.
of people qualify for it because the
Yeah.
income limit's around, give or take, depending on how many people are in the household, around $74,000 a year. So there's a
that's
lot
a-
of people.
that's take
That's
advantage
a
of.
A lot of
huge
people out.
majority of the families probably in Jackson County.
You know, some of the people may have heard about these, you know, the sky was falling at the first of the year because by January 10th, the final implementation of the Dodd-Frank Act came in. And they told us that we couldn't do 40-year amortizations anymore, which we haven't done in 3 years. They had told us there was no stated income loans anymore. There were no negative amortization loans anymore. They told us all the things that we kind of already knew from 3 or 4 years ago. You know, so the final draft kind of scared people. And there's a term out there called QM, which is qualified mortgage. Well, by the way, Joe, we've been qualifying people for mortgages since 1995, okay? And then there was that window in there. There was a lot of exotic products and so forth, but it's really gone back to qualified mortgage since '06.
Yeah.
You know, so that's the
Which
better
is really
part.
the products you've been
But,
dealing in the whole time.
So it's kind of the same thing, different day for us,
Yeah,
and they made
yeah.
kind of a big deal about it. You now have to qualify for a mortgage. Well, you've had to for the past 7 or 8 years without any. So they made it a little bit more rigid, but overall, it's business as usual for us.
And,
Yeah.
and bottom line is to come in and see Jim or Sandy and just put your stuff on the table and find out where it all shakes out and what the opportunities are out there. Because that's the beautiful thing is you can match people with the loans opportunities that are they're gonna make it work for them.
We've been out doing presentations, and these are the highlights: FHA, USDA, QM, condos.
Right,
Cool.
condos. Condos.
Very important.
There's not a lot of condo projects in Jackson County, but the condo projects that there are, when you were purchasing a condo project, typically in that entire project, at least 50% of the complex needed to be owner occupied, and in order to purchase a home. And now when you're buying that house and a house to live in a condo project, that rule has gone away. So for condo projects, if you're buying a house as an owner occupied in a condo project
With a conforming loan.
with a conforming loan, the rule of 50% or more, 51% or more of those units being owner occupied, that rule is been taken away.
We can now disregard those ratios. The project still has to be an existing project. It has to be budget worthy and reasonable HOAs and all those things. But now we're no longer dealing with red flag, how many owner occs are in there.
Right.
So that's a positive development for people.
Yeah.
You know, it really, really is. We've been doing some stuff with, you know, we talk about QM and the sky is falling and you got to qualify. There's investors now that we're dealing with. We've been pretty much restricted to 620, a lot of investors 640 credit. But we now have identified some sources where people's credit haven't quite recovered, but they have all the other things to go. They have the ability to repay, they have some money down, and we're doing some FHA stuff below 600. And it just kind of a makes sense. It's not an electronic underwriting, it's a make sense manual underwrite. And we look, it's old fashioned. We look at, you know, and basically what we're looking at is that some bad things happen to some good people. And so there is some loosening of guidelines and in some areas.
Yeah.
So it, you know, the QM is ratio driven. That's, you know, too much debt, can't get a loan type thing. But the credit scores now are, we're able to do some things that we haven't done in years.
Yeah.
And they put into place some really good guidelines and some waiting periods that we've been able to establish and look at if somebody is coming back into the market after a bankruptcy, after a foreclosure. So we look at those things, what led to that circumstance, what caused them to be in that circumstance, and then we document that and make exceptions to the credit score guidelines.
Sandy makes a really important point for the consumer out there. So many people were under duress during the recession, and we're obviously we're scratching and clawing our way out of it. But now at least when someone calls us and there was an event in their life, there was a decline in income, there was medical circumstances,
Job loss.
someone lost their
Right.
job, and they had to give their property back to the bank, or were forced to sell it short. At least now, when people call us, we say, when did it happen? When did it occur? Was it concurrent with the bankruptcy? Did the foreclosure precipitate the bankruptcy? When did all these things happen? And we have specific guidelines, starting points, waiting periods that we can deal with. And it's wonderful for people.
How many people just write themselves off and don't even give themselves the chance, just assume that they cannot?
If they've reestablished some things, they've got good rental history, they've got good employment, they've been able to sock a few dollars away, or they got enough to get in on an FHA loan or a USDA loan. So it's really kind of cool for us right now, because when they call us up, we go, okay, what happened? When did it happen? And how far along are you now in terms of reestablishing things? So it's really helpful to us because we have some guides and parameters.
Are we into our Did You Know list?
We're all the way going right down
Yeah,
it.
We are cruising through that.
Let's catch people up real quick. You're watching the Real Estate Show here for February 11th. So let's go to our PowerPoint slides if we could, and we will catch you up to date on a couple of these topics because we actually had some graphics to supplant our little offerings
We're
here today.
just kind of going with, did you know this, Joe?
Yeah, and I was learning a lot.
Yeah.
This is good. This is why we bring you in, because we get these great updates. Here's the new digs, first and foremost, though. And tell folks again, Sandy, where your new offices are. It's just a really beautiful setup
We
there.
are in the Hillcrest Office Park off of Hillcrest and Foothill, right across from Roxanne Vineyard, and it's absolutely gorgeous up there. We love our location. We're right by Good Bean Coffee, and
Right
we
down
love
the
it.
street from Morton's.
Yes.
Got lunch and dinner covered.
Absolutely.
So, it's a good setup there.
Fortunately, Morton's delivers all the
Yeah,
way.
that's good. So
They do.
Sandy doesn't have to leave her desk.
Yeah,
We like her at her desk. That's a good place to feel. Let's catch up just on some of the things we covered. The FHA loan limits have decreased to $279,450. That means your purchase price is right about $290,000. USDA is catching up, running more efficiently, about 10 days now. Once a full file is delivered, and had a couple of those come back in 4 days last week. So since the government shutdown, USDAs are back up and running more normal on timelines. QM, the qualified mortgage rules, pretty much the same you've always been dealing with at Mortgage Express. They haven't had a lot of exotic products put in front of you because they oftentimes don't work well for people, and they have specialized in making mortgages that work for folks and keep folks moving forward in their homes. And existing condo projects no longer require the 51% occupancy ratio on conventional owner-occupied purchases. So that's something for our investors and folks to maybe know and kind of catch up on there too as well. And the guidelines are loosening up in some areas. We've heard that they've tightened up over the last few months and into the new year, but recently got a new FHA with a under 600 credit score. So there are situations that are really workable there. Now, I think we're caught up.
And we have the standards and guidelines for buyers re-entering the market.
Exactly.
You know, and that's all. That's short sale, foreclosure, deed in lieu, bankruptcy. And that's extremely helpful. The next point, Joe, I don't know if that's still up there or not, but something that we have that we feel, we say that Mortgage Express has a powerful tool called Rapid Rescore. We gave an example to some of our referral partners today, whereby we did have a QM situation. The guy was capped at 43%. And it was just he, as the borrower, was a 677 credit score. We are able, this is extremely powerful, very, 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 very cool. When we pull someone's credit, it tells us how many points, right out of the gate, it says it right on the credit report, how many points they could improve their credit score. And then if we want more information, we click a button and it tells us, basically gives the people a roadmap. Most of the time what it entails is simply reducing some of the balances on their credit lines. Mm-hmm. And it tells us, if you do this, you'll improve your score by 20 points. If you do this, you'll get another 5. Or, and a lot of times it's blended. Sometimes we have to change 2 scores because we deal with the middle score. Mm-hmm. But we are instantaneously able to tell a borrower what type of money it would cost them to move their credit score. In that particular case right there, what happened was this person was involved in a pricing adjustment due to his credit score. By improving his credit score with a minimal amount of money, we got him over 700, saved him a half a point in interest rate, suddenly his debt to income dropped
ratio.
because he saved $80 a month on his mortgage,
right.
and now
Now-
QM no longer applied to him
Right.
because he was below 43. So it's a very powerful tool. Sandy just had one where people had just really poor credit, right?
They did.
Not poor
We had
credit,
a
poor credit rating. Yeah.
544 score, absolutely extenuating circumstances, been through a lot, and had some credit card debt. So we looked at refinancing a vehicle that had a low balance and good equity, took that equity, paid down some credit cards, and increased the credit score over 100 points.
Wow.
And now all of a sudden we have a buyer.
She's a buyer.
She's a
The
buyer
lady's
now.
a buyer.
That's incredible.
Yeah.
And think of the money over the term of the loan. That
Oh.
half a percentage point adds
Oh.
up to how much?
Absolutely.
Yeah,
It's a very powerful tool. We were in a prestigious real estate office today giving this presentation, and they just said, we've never heard of that.
Right.
And it's instantaneous. It's right at our desk.
Oh, there's a lot of people that say, "Oh, you don't qualify. Your debt to income ratio is too high," but they're not given any options on how to rectify that.
Right.
Or your credit score is too low. You don't qualify for an FHA, or you don't qualify for conventional.
Yeah.
Some programs are credit score driven. Some of them are not credit score driven. That's all part of what we do. And if we can get you a significantly better interest rate by increasing your credit score, it's worth the time.
And by the way, at no point has anyone heard you mention that there's any fee associated with that or any costs associated with that. That's the service that comes with doing business with Mortgage Express. Those
Absolutely.
tools are at your client's disposal to go to work for them and to help them get to be buyers. And that's when you get your payoff. But beyond just financially, you've helped some people that really may have not had other options open to them. And you open those doors.
Either they became eligible to buy a home, or they saved a significant amount of money over time. And it's a really powerful tool that we have.
That's really good stuff.
It's called Rapid Rescore.
Yep. Mortgage Express, Jim and Sandy are the places to go to get your rapid rescore.
Yeah.
You just don't walk in anywhere and get that. And finally on our list, we're going to talk a little bit about HomePath before we're done tonight, and was interested to hear that you two were the first ones to bring HomePath financing to Southern Oregon. So thank you for that, by the way.
It was about 2006.
About 2006, yeah. Let's explain. People will be out shopping around for homes. They will open up the real estate section. They will go on the MLS. They will go online. They will check their favorite real estate agent, or they'll send. And you'll see properties coming onto the market that are designated for HomePath financing. And I'm going to let Sandy explain that, but effectively what HomePath financing is Fannie Mae has taken back a lot of homes through the years. And so they're real estate owned properties. They have sort of held back on inventory here of late, so we haven't heard a lot of HomePath.
Right.
You will see a steady flow
We are
of
seeing.
HomePath listings coming on the market in Jackson County and in Josephine County. And we happen to work with the principal people that are involved in that. And the fact that so HomePath is basically a really cool program that Fannie Mae has designed specifically to incentivize people to buy their houses.
Yeah.
Right.
Yeah.
It's really cool, and
for-
Sandy can elaborate, but that's what it is. It's HomePath listings and they've got their own fancy financing, which makes it really cool to get in homes.
Yes, and I subscribe to the daily updates that come from the HomePath folks, and the last 6 weeks it has just lit up. And there are multiple homes on there some days, and at least one every day that we're seeing. So
And there's more coming.
Yeah,
Yeah,
we've
and
been
there's
kind of
more.
waiting for that shadow inventory to
We
come
kind of knew they were
out of the
coming,
shadows. Yeah.
so we kind of geared up our HomePath.
And
that's
we
good
we
work.
brushed up
people
on
out
HomePath.
there, they know it's coming too, because you're driving around, you see these little pieces of paper in the window of a house that's been vacant for a long time, and you're like, why isn't it for sale? These are houses that have been foreclosed on by the bank. The bank is governed by Fannie Mae. Fannie Mae also funds a lot of conforming loans. So they offer a special financing for the properties that they own. Requires 5% down for owner-occupied properties.
Do we have a slide?
Yeah.
And then for an investor, normally you need 20% down to get a loan on a house that you're buying as a rental. For HomePath properties, you only need 10% down. Not only that, but these loans have no mortgage insurance. Mortgage insurance does not insure the buyer, it insures the lender in case you default.
Brittany, can we go to our slide real quick? Thank you. Go ahead, Sandy.
So mortgage insurance, no mortgage insurance on HomePath loans. And there's also no appraisal required. So this is just a really great product, especially for an investor who's going in and purchasing a home and wants to spend some of their money to fix it up. 10% down, that really saves them a lot of money versus 20% down. And then also for the owner-occupied buyer with the 5% down, no appraisal, no mortgage insurance, when we compare this loan to an FHA loan or to conventional loan, the payment is significantly lower.
Should be, yeah, with the mortgage insurance and
Now, all these products
have
have different interest rates, and they have different underwriting guidelines. Can you get a gift? Can you not get a gift? What's a minimum credit score? But the HomePath financing is just on fire right now. And you'll notice on listings that you receive from your preferred real estate agent, it will have a designation. This property is eligible for HomePath financing. So that's where we come in. And we help the buyer when they come in, and we pre-qualify them according to the QM rules or determining what type of program best qualifies or but they best fit their needs. We also look at HomePath financing. So this is just a really good option for buyers that are out there looking at houses and seeing
What
what's
happened
available.
was in the middle part of '06 probably, Fannie Mae, this whole concept came into play. And in fact, we were at Mortgage Marketplace, Sandy and I, when we had our own company, and we went out and got this. We went out and got this product, and got very well versed in it. Now that we knew they're coming back in, we went back to our principal people at our bank, the owners and the really smart people up in Portland that run our company at Mortgage Express. We said, we need this product back. And lo and behold, we have it. It's really aggressively priced. They go through the system. They go through the same underwriting system as all of our other loans. And they have a tendency to speed up because there's no appraisal.
Yeah.
Mm-hmm.
Yeah, so it's the same. It's a loan, but it has some features that make it very, 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 very much attainable for people to get into homes, and it's really quite a smooth product.
Yeah, good stuff. I wouldn't know where to start to find the best loan product for myself, the best rates. If I just went online and started taking a pot shot at it, I'd probably cost myself tens of thousands of dollars. This is why folks should just come and bring their information to the experts such as yourselves, because you can make that match, and you really can move them and steer them in the right direction to really get the best value, the best results, the best rates, and everything that is going to make them happy and successful homeowners moving forward.
And it also really depends upon the house that they find as well. Is it in a USDA eligible area? Is it a HomePath property? What is the best option? So those are the things that we look at. Not only do we look at how does the borrower qualify, but also how does the property qualify. So those are all things that we study every day. We pride ourselves in knowing our guidelines inside and out. So it's something that you can't know, and you don't need to know. It's something that we can help navigate people
Basically
through the
just
process.
need to call us. That's all they really, and we both really enjoy the whole educational process for people too. People are inquisitive, they have questions, they're antsy, they're a little apprehensive at times, and I think the best way to put them at ease is to provide them with information, address their concerns, and really, when people come sit down with us for the first time, we want them to walk out of there being well-informed consumers and know basically.
It can be uncomfortable.
Coach has got to say how the game is played, But
Right.
that's kind of
You're putting everything on the table, and that's our jobs. Is we want to help people. We really want to help you understand what your options are and what your best choice is.
And you guys are experts at it. You do it every day, and you know the products, and the game changes from month to month, week to week, and certainly from year to year. And it takes experts to stay on top of it to really get the most out of what your opportunities might be.
And I think that, and I know we have to get to the market watch, but we're becoming pretty open, would you say? Kind of adamant about another way besides our expertise and product lines that we separate from our competition. Basically, we work for less money, and our people get better rates and better terms, and it costs them less money. They come to Mortgage Express if they would simply make one more call, give us an opportunity to either help solve their problem, but in the meantime, we're confident that we'll be extremely competitive, if not superior, in pricing and rate.
And definitely in customer service, helping people understand what their options are and what they can do to better
We're
their
confident in
situation.
saying that. I mean, we just feel like people will get a absolutely quality experience.
I've had
Shoot straight, and we really, really feel like our business is perpetuated by the fact that everybody that walks out of there feels like they got a pretty darn good deal in comparison to what they had been told at other places.
my own clients have had excellent experience with Mortgage Express. We're out of time. We're going to have to let Pete handle the Market Watch, but excellent information. Thank you, Jim and Sandy, both. You can get a hold of them at Mortgage Express anytime. Just Google them up, and you can find out how to get in touch with them and get yourself started. Find out where you stand and what the opportunities may be out there for you to become a homeowner yourself. Take a quick time out. Pete Castro standing by. Segment 2 is coming up right after this.